Welcome back. I'm Pratap here. Today is 29th April 2024. In this video, let us analyze the performance of high liquidity zones generated in our previous report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. So all the training videos are available at our NeoStock YouTube channel. So from the NeoStock home page, you scroll down and click on the playlist Supply Demand Zone Price Action course. And in this playlist, all the training lessons are available. If you scroll down to the bottom of this page, starting from lesson 1.1, all the lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I also provided the link to this playlist in this YouTube video description. So from there you can join into this page. I also provided the link to our Telegram channel. Please join in the Telegram channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. In the last video, HLQ report video, we identified 7 high liquidity zones from daily and 75 minutes time frame. So out of these 9, we got 2 trades. One is Biocon and another one is VIPRO. And each stock we got 2 trades today. So total 4 trades we got. One is stopped out and remaining 3 are successful trades. So let me start with VIPRO. We got 2 successful trades in VIPRO. VIPRO is a 75 minutes high liquidity demand zone. We have a rally, base and rally. And this 75 minute zone we fine tuned with 15 minutes time frame. See here we have a drop, base and a rally candle with some hidden gap. That is a pro gap. And again we fine tuned this 15 minutes with 5 minutes time frame. So here we have a ERC candle as a leg in. You can consider this as a rally, base and a rally candle. You can add the hidden body. And also there is a pro gap is there. That's why, because the pro gap is very small, up to this pro gap area I have drawn the zone. Pro gap area is our entry. Because risk is very minimal. And see the low of this candle. 461.60. And see the close of this candle. 461.50. That means there is a 10 paisa gap. That 10 paisa gap is a pro gap area. Generally what institutions will do, if the gap is very small, sometimes they may keep a very strong order flow, and VIPRO is a classic example for that. The reason is today VIPRO gave us 2 trades. See the low of this candle, 461.60. Earlier we have seen the low of this candle is 461.60. Even today's the entry is low of that, exactly that low of that 461.60. See the second trade. See the low of this candle. This is also 461.60. And see the rejection from here. Even here, see the rejection and continuation again, see the move. Here in a single candle, the strong rejection. That means there is a very, very strong order flow institutions kept in this area. Anyway, this is the way how we plan our trades. Then what is the target? Target is our 15 minute zone. So here we have a rally, base, drop, follow through candle. But this is not a great leg out structure. But anyway, that is okay because this is only a target zone. Because in case this zone is a very big zone, and in case if you want to properly fine tune for your entry point of view. Inside this area again you go to 5 minutes. That way you can draw the zone. So instead of drawing such a big, anyway it doesn't make difference. You can draw a zone like this here exactly. This is the perfect actually for your target. This is a 5-minute zone, but this is inside 15-minute zone because our prices reach up to 15 minutes area. This 5-minute is a zone confluence with 15. But for our analysis point of view, when you fine tune, this is a perfect. See here, prices entered and reached here in this target. When we got the trade at 10 o'clock 10 minutes, we got the trade at 10 o'clock 30 minutes, so 5 minutes candle, it reached the target. That means in 20 minutes, trade is finished. And also if you look into the RR from this demand zone to this supply zone, we have exactly 1:4 RR is there. Excellent. What about the second trade? Second trade, this is the entry and the target may not be reaching up to here because here, see we have a based drop which is holding the prices several times. This is the 5-minute zone. That probably this could be a high liquidity. Maybe at least 80% we can say confirmation because it's again and again from here. See here, again and again. See the rejection exactly. Sometimes going deep, sometimes exactly at the proximal. This is how price is moving. So this way you can fix the target. And moreover, market is also reaching the last 1.5 hour trading session. Last 1 hour or 1.5 hour, probably reaching 15 minutes target might be very difficult. And moreover, this may not be letting the prices to go up to. See, finally it is broken at the last minute of our trading session, last 10 minutes. But the rest of the day, how it holded the prices. But what about the RR? So we have 1:3 RR is here from this zone to this zone. We have 1:3. That's good. A little over 1:3 is there. 1:3.1 or 1:3.2, something is there. But anyway, this is also a good trade. Generally during the intraday same zone we can take multiple trades. That is allowed. Because from the pro gap area it is picking the prices. Definitely we should value the pro gap area. Who knows, it may give third entry also. See here, it didn't exactly reach here, but close to this area it has reached and again moved up. That means institutions are keep on adding new order flow might be in this area. Anyway, this we cannot consider because the last half an hour of the trading session. These two are valid trades. And the first one is having up to 15 minutes target zone. This is up to 5-minute zone. Definitely some difference in the profit levels. And VIPRO has given, first trade it has given 3,375 rupees, which is a 2.7% ROI. So it didn't give 6.1%, sorry, our average ROI is 6%. Compared to that, it is a small, but 2.7 during intraday is always a good ROI. As per one futures margin cost we are calculating. And the second trade has given 2,550 rupees, which is a 2.1% ROI. If you combine both, you would be getting a 4.8% ROI you will be getting. And if you combine the profit, you will be getting 5,925 rupees profit you get from both these trades. See, generally what happens, when the distance between entry and target is small for high liquidity zones, many times it will give us multiple trades during the intraday. That is what happened to VIPRO today. So this is about VIPRO. And next one is Biocon. Biocon is also a 75 minutes high liquidity demand zone. This is a rally, base rally. This we fine tuned with 15 minutes time frame. So in 15 minutes we have a rally, 1, 2, 3, 4 base candles and again a rally candle. This again we fine tuned with 5 minutes. We have a rally, base, rally. But below observe carefully, very interesting. We have a drop, base, rally. This is a 5-minute zone. But this 5-minute zone and this 75 minutes high liquidity zone are also overlapped at the distal line. If you are following the recent Nifty and Bank Nifty analysis videos, probably you will observe this technique. Nifty and Bank Nifty also recently, you have seen. Probably for the last 2-3 analysis videos, we've been discussing this point. Nifty and Bank Nifty, one of the stocks from 75 minute zone, it created a daily zone, high liquidity zone. And also, in another stock, one is in Bank Nifty and another one is Nifty. I think in Nifty, if I am not wrong, from the 75 minute zone, a daily high liquidity is created. I think in Bank Nifty from daily zone, weekly zone is created. Please correct me if I am wrong, if I am telling in the reverse way. But anyway, observe the technique. In both those stocks, those higher time frame zones are slightly pierced. Prices entered into this lower time frame area, picked up the orders, and then prices moved up. They have given a very good swing trade profit. The similar kind of price structure you are seeing here. That's why understanding price structures are very, very important. Actually, the 5-minute zone is the reason behind the creation of this 75 minutes high liquidity zone. Exactly the same way, Nifty and Bank Nifty also, daily zone is the reason behind the creation of a weekly zone. Similarly, in another stock, indices and another indices, 75 minute zone is the reason behind the creation of a daily zone. So such kind of price structures we have observed. Exactly here also. They are slightly overlapped. And such kind of zones are working very well. And not only that, this will act as a bear trap. See today what happened? This 5-minute zone is violated. Actually, this 5-minute zone is a very good zone. Nothing wrong with that. Why it is a good zone? See the rejection just before entering into this. If you draw week to week, it is already a tested zone. Week to week, rally, base, rally. When you see a considerable gap between type 1 and type 2 proximal, see, the type 2 proximal is not close to the type 1. There is a considerable gap. That means strong order flow still remains here. Even below this candle also there will be order flow, strong order flow. Because of this rejection, see the rejection and the move. Definitely there will be a very strong order flow. We should not miss such kind of trades. Many times they work perfectly, but today it failed. That is a different story. That's why I'm saying, I'm not saying every time they work very well. Many times they work. Once in a while they may fail, once in a while. Maybe today is such kind of situation. We have to accept. Because we are taking the risk. We are accepting the risk and we are taking the trade. If the trade is stopped out, you have to accept that. And moreover, it is a very minimal loss. Because the risk is small, but reward will be more. Right? But today, unfortunately, this zone is failed. Maybe there could be several reasons behind. Institutions might have cancelled their order flow here and moved everything into this trap area. They might have decided, let us capture all these bears because your orders are stopped out, and they might have, people would have, their stop loss is hit. They would have exited from the trade. So all this entire liquidity, the new liquidity, the short orders, has been captured by the within this bull trap area, I mean a bear trap area. And see, after that the price has moved, there is a huge rejection, again came here, once again it picked up the orders, and further it moved up and finally reached the 15 minutes target. So here we have a excellent drop, base drop. So when you got the entry at 10:45 candle, we got the entry. Let me change the time frame to 5 minutes. So at 10:55 minutes candle, it reached the, in case if anybody missed, you got a second opportunity again at 11:05 also. And finally it reached the target at 12 o'clock 10 minutes candle. Okay, how much loss it has given and how much profit it has given? Let us look into the both. So Biocon has initially, when the 5 minutes fine-tuned zone is violated, it has given a loss, the stopped out trade, 1,375 rupees loss, which is a negative ROI 0.06%. See, we can accept the risk up to 2%, maximum risk. It doesn't mean every time you have to take that. Maybe your accepted level could be only 1%, or your accepted level could be only 0.8%. Otherwise, you reject the trade, or you will use the position sizing and you will plan your trades. This is all depending on your risk management. But the maximum accepted risk is up to 2%. Compared to the 2%, this is a very, very minimal one, 0.6%. So that's why based on one futures margin cost, you would have got 0.6% negative ROI, and which is a loss of 1,375 rupees. The second trade from the 5 minutes bear trap below the 75 minutes high liquidity demand zone, you got a profit 14,375 rupees, which is 6.6% return on the investment as per one futures margin cost. Maybe you can trade in options, or maybe you can trade in cash market. It's up to you. But my calculations are based on one futures margin cost. So these are the successful trades today, apart from one stopped out trade. And let us look into the remaining stocks, how I fine-tuned. Some of the stocks we already fine-tuned earlier. I don't want to explain those. If you refer previous high liquidity zone videos for the last 2 or 3 videos, you will see those zones. The first one is Bosch. This is a daily high liquidity zone. I think probably in 24th April high liquidity video, 24th or 25th, one of these videos, I have explained how to fine tune this zone. Please refer that video. But anyway, today prices did not enter into this zone. Next one is HDFC AMC. This is also a daily zone, but this is fine tuned now recently. This is a daily zone. How I fine tuned, I will explain. We have a drop candle, 2 base candles, and a rally candle. So this is what our software identified. So what I did, I went to 75 minutes time frame. Here I have seen we have a drop candle, 1, 2, 3, 4 base candles, again a rally candle with hidden body. So we have a 75 minute zone. So inside 75 minutes, again fine tuned with 15 minutes time frame. We have a drop, we have a base candle, and again we have a rally candle. Drop, base, rally, this is the 15 minute zone. Within this 15 minute zone, again fine tuned with 5 minute zone. We have a drop candle, we have a 2 base candles, and again a rally candle. This is the 5 minute zone. Probably this 5 minutes could be a high liquidity zone. Probably. Why? Because many times prices are moving from this zone. again came down, and again from here again moving up. Sometimes the new zones are getting created. See here, drop, base, rally again from this zone. Anyway, you will be referring your order flow from this zone. These drop, base, rally, they will be giving new power to this particular zone, because some more institutional orders are added into this zone. These are all the indications. After that again, see here, prices once again they entered into this zone. Probably here also institutions might have created drop, 3 base candles, rally. But anyway, we will refer from here only, because this is the one picked up the orders from this. See again, recently prices are exactly picked up rejections from this zone, proximal line. So that means a lot of order flow is there in this zone. So what is our plan? Again, prices entering into this. There is nothing wrong in planning. Maybe it may work, it may fail, because it is already tested several times. But there is nothing wrong. If the risk is small, there is nothing wrong in planning your. Maybe if it is successful, again you will get a good return. So this is the HDFC AMC. The 5-minute zone is a high liquidity zone. And next one is HDFC Bank. This is also a daily high liquidity demand zone. And this one is already fine-tuned earlier, I explained you. Probably if you look into this candle when 23rd April HLQ analysis video, I might have explained you how to fine-tune this zone. So please refer that video in case if you did not listen how to fine-tune this zone earlier. This zone is already tested twice. Second time prices went more deep inside. That is what I explained in that video. So please refer that. Next one is Hindustan Unilever. This is also we discussed. No. Hindustan HUL is yesterday only we got. Yesterday only I fine-tuned this zone. So how I fine-tuned? This is a daily zone. Look into this. We have a drop, base, rally candle. And this is fine-tuned with, and when is this zone created? On 29th June 2022. The problem with this stock is we will not be getting access to 5 minutes data till this particular time period, because trading we will provide only last 1 year data. If you take basic plan, probably they will give access to only 6 months data. I have taken that professional plan, so at least they are giving me 1 year access to last 1 year data. This is the problem with TradingView, which I didn't like at all. So anyway, but still in any recent price action in the zone, we may get a new order flow. That could be one reason. First of all, here 75 minutes I fine-tuned. I did not find any 75-minute zone. There is no proper 75-minute structure here. But why I have drawn this zone? This is on 15 minutes. Why I have drawn this zone, I will tell you. Just want to check any aggressive trade. Recently you land aggressive trade. I just looked for that possibility, if there is any aggressive trade is available. So I identified one. This is a ERC candle. You can consider this as a rally, base, rally. It looks like a drop candle, but see the rejection. Based on that, assuming this ERC could be a rally, equivalent to rally. Base, rally. So this is the 15-minute zone. We can't fine-tune to 5 minutes because 5 minutes data is not available. But see recently what happened. Recently means somewhere in the middle, once prices entered into this zone, recently only. See, prices came down and see the huge rejection it moved. That means there is a strong order flow. But the only thing is 5 minutes data is not available here. But in the recent 5 minutes data you can access. So that way you can check whether is there any zone is available. So that way I verified. But this is a drop candle. This is again a medium size rally candle. So there is no zone, newly created zone within this area. But this rejection is maybe because there is a strong order flow. But 5 minute zone is not available. We cannot identify where exactly the order flow is there. If anybody wants to take a blind trade just below this rejection, you can place your trade. But it is a risky if you plan like that. Next, apart from that, in the recent price action, identified a rally. See this rejection rally. After that, 5 base candles, 1, 2, 3, 4, 5, 6 base candles, a rally is created. This is a 15 minutes. Now we need to look for a 5 minutes inside, but I didn't fine tune 5 minutes. The reason is the structure of the zone is not good. See here, so many 1, 2, 3, 4, 5, 6, 7, 8 base candles. Rally, 8 base candles rally. So anything above 6 is a very, what to say, it's not a good zone. So that is the reason why I couldn't. But before this zone there is a rejection, but we don't know why this rejection. Is it because of this zone? We cannot. Maybe institutions trap, it could be. It could be anything. Because there is a rejection, you may think next time we can place an order here, but see the structure is very bad. Easily it will be violated. Just ignore this rejection. Because we need to find a proper order flow below this that we couldn't see properly. So anyway, this is about Hindustan Unilever. And next one is Kotak Bank. This is also a daily high liquidity zone. And when this zone is created? In the year 2020. 2020 means you won't be having even 15 minutes data is also not available here. We have a rally, base rally. If you go to 75 minutes time frame, here we have drawn on 75 minute zone. We have rally, 2 base candles and a rally. This is what you can, rally, base, rally. But the problem is you can't fine tune this zone. 15 minutes data as well as 5 minutes data is not available. So that's why I'm just leaving this stock. Today prices came close to this. Actually, this is yesterday. This is today's candle, 9:15. So anyway, we can't plan a trade in this zone. And remaining already we discussed Biocon and VIPRO. So this is about the analysis part of these high liquidity zones, how we fine tuned and what kind of zones we got the trades. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.